Happy New Year, everyone. I hope everyone out there enjoys the new year and has an amazing year. First video on the agenda for this year, we're going to be talking about rental income for FHA financing. I know this is very rare to see a borrower buying an FHA loan and they have rental properties, but it does happen. And I feel it's important to discuss as mortgage professionals may be a little bit confused when it comes to FHA as more factors come in play than a regular conventional loan. So let's get into it. Rental income from other estates holding may be considered effective income if documentation requirements that we're about to discuss are met. If rental income is being derived from a property being vacated by the borrower must be relocating to an area more than 100 miles from the borrower's current principal residence. The mortgagee must obtain a lease agreement with duration of at least 1 year after the mortgagee closes and evidence of payment of the security deposit or first month's rent. First, let's discuss if your borrower has limited or no history of rental income since the previous tax filing year. We must obtain an appraisal for the property that we're trying to use rents for. This includes if we're trying to use rents for a departing property. The appraisal does not have to be an FHA appraisal, but it does have to have the 216 or the 998 form in it. And you must have 25% equity in the property that you're trying to use the rents for. We must have a lease agreement and proof of first month's rent paid or security deposit paid and deposited into the borrower's account. You still need to provide 2 years of the most recent tax returns to show the borrower does not have a history of obtaining rental income. Now that we discussed what documentation is required when you have a limited history of receiving income, let's dive into the calculation of the rental income. We must always deduct the PITIA. The income that we are allowed to use is lesser of, remember guys, it's lesser of, not greater of, the income on the operating report form 216 or 998, or 70% of the lesser fair market rent reported on the appraisal, or the rent reflected on the lease of the rental agreement. Remember guys, it's lesser of the two. We discussed when the borrower does not have rental history on what FHA requires. Now we will discuss on what we have to do when the borrower does have a history of collecting rental income. We must calculate the rental income that is on the Schedule E accordingly. I'm not going to give an example of this here as it takes longer than 5 minutes to explain. That's a separate video. If the property has been owned more than 1 year and it's on the Schedule E but less than 2 years, FHA allows us to annualize the rental income for the length of the time the property is owned. If the property is owned less than 2 years, we must obtain documentation that shows when the borrower acquired the property. We can always use positive net rental income. And we must remember that if we have negative rental income, we must hit the borrower on their DTI for their negative rental income. Now let's talk about our best friend, COVID, and FHA's overlay for using rental income. The good news around this is FHA states that this applies to case numbers affected on or before September 30th, 2021, which means the guideline only applies if your case number was issued prior to October 1st, 2021. I know there might be someone out there with this issue, so I'll briefly address it. We have to reduce effective income by 25%. This is not the vacancy factor that we discussed. You must reduce it by 25% even with the vacancy. For forward mortgages, we must verify 6 months of PITIA reserves, or we must document the borrower received 2 months of rental payments. Well, that's it for this week, guys. For more content like this, please make sure you follow, subscribe, and like. And please share with your peers if you think this page can help them as well. And see you guys next week.